All right, so in this video, we're going to be going over what a doji is. Essentially, dojis indicate market reversals, and how we spot them is by looking at the wicks of the candles. So let me draw this out for you. We have our candle, right? We have a big wick like this and a tiny wick like this. What does that mean about this big wick right here? This indicates a bullish doji. Why? Because we had price down here at one point, but we can see that clearly there is a lot more buyers than sellers in the market, indicating a market reversal. And we only really look for these dojis on the 5-minute time frame. And for example, of a bearish doji, it's simply just the opposite. We have our candle, right? We have a big wick up here and a tiny wick down here, right? Why? This indicates that, yeah, there were buyers in the market up here, but what happened? Sellers clearly overpowered them, indicating a market reversal. So let's get into the chart and let's show you what a doji is in real time. So right here is a good one. This big candle right here and this massive wick right here, we're going to mark this out as a doji, as a bearish doji. Why? Because, yeah, we had buyers here, but what happened? We had a significant amount of more sellers. And then what happens? We go down. And then what happens? We see another doji foam right here. It's going to be a bit or a bullish doji, right? Why? Because we have this big wick right here, meaning, yeah, we had our sellers, but what happened? We also tap back into this fair value gap right here. This bullish fair value gap we tap back into here, right? And what happened? The buyers overcame the sellers and made this go back up. Okay. And then what do we see right here? Another wick leading us back to the downside. And then what do we see right here? Another big wick leading us back to the upside. And then what do we see right here? Another wick leading us back down to the downside. Okay. So that's all a doji is. It's just a big wick that indicates, yeah, market's going to change direction pretty soon, guys. So let's go on to like a 15-minute time frame. I only mark these out on 5 and 15-minute time frames. I don't ever mark them out on smaller time frames because they have less confluence on smaller time frames and less significance. So let's show right here, right? We have this big wick right here, this big bearish doji right here, right? What happens after this occurs? We see market goes from bullish structure down to bearish structure. And what else do we also see? We see a close beneath this recent low, indicating a break of structure. So now, not only do we have a bearish doji up here, we also have a breaker structure from the upside now, indicating that, yeah, we're going back down to the downside. So let's hunt out liquidity. And what does price do? It hunts out liquidity exactly. Okay. Right there, right here, right here, and even gets down to this deepest low right here. Well, actually, it doesn't make it down to this low right here, but it scrapes it essentially. So what does that mean? And then look what happens next. We see this bearish doji, right? And what's this right here? A bullish doji. And what do we see after this bullish doji forms? We see price go from bearish to bullish now. Okay? And then what do we see after this happens? Oh wow, look at this right here. A bearish doji. Okay? What happens after that forms? Back to bearish price action. And then what happens? We have another bullish doji form right here. What happens after that bullish doji formed? We have bullish price action. And then again, right here, we have this bearish doji form. What happens after that? We go back down to bearish price action. And that's all a doji is. It's just go to a higher time frame, right? And look for giant wicks on candles, indicating a vast difference of orders, right? Since let's look at this one right here, right? This big doji right here. That means, yeah, we had these purple candles are bullish candles. So this is gonna indicate, yeah, we had a lot of, what the heck? We had a lot of buyers right here, right? And we had buyers up here, but then what happened? We then saw sellers overcome our buyers, bringing this candle close back down to right here, leaving this big wick. And we can also even see right here off the volume indicator that we have a lot more sellers now than we do buyers right here. Okay. And then what happens after that bullish or that bearish doji formed? We then go back down to this downside until we hit this 15-minute bullish fair value gap. And that's why we see price then reverses off of that. Okay. We come back into this fair value gap. It gets respected. And then what do we see? We see now a bullish doji get formed right here. Why? Because we see price is respecting this fair value gap. We see that, yeah, we had sellers from these candles, but what happened down here? We lost all of our sellers and buyers came in and pretty much overcame all of the sellers that we had. And that's why now price is going upwards to the upside, because buyers are overpowering our sellers. Okay. And then what do we see right here? We see a neutral doji. That's pretty much meaning that we have, yeah, we have two big wicks, but they're essentially equal, so we wouldn't really mark this one out until we got to around, let's see, this is another pretty neutral doji right there. But that's all a doji is. It's just seeing the big wicks in the market and understanding that those wicks indicate market structure shifts as well. So we have this big wick right here, we go down. We have this big wick right here, now we're going back up, right? Now we consolidate a little bit, we make equal lows, and we go back up, and then what do we see? A big wick right here, followed by another big wick right here, and what happens? We go down to the downside, and then what happens? We see a big wick right here, and now what are we doing? Going back to the upside, okay? That's all a doji is. It's essentially your candle, right? It's going to be your candle, okay? And then it's going to have a big old wick on it, like that. Like this is going to indicate a bearish doji, okay? And like this, a bullish doji is just going to be the opposite, okay? We're going to have a lot of sellers down here that got overpowered and became a buyer's market, right? That's all a doji is. It's simple. That's all. I'm not going to overcomplicate what dojis are. If you go out in the market and you mark out these dojis, you can literally see exactly where these highs and lows are, okay? And you can see why price moves the way it does. For me, dojis were a big factor on what helped me see the market move in the way it does. Um, yeah, that's what a doji is. Doji is imbalance of orders being placed. Like any other confluence, it's an imbalance. Um, we have bullish doji right here. Yeah. Then we have bearish doji right here. And then we're going down. Going down. We have another bullish doji right here, followed by a bearish doji up here. Going down, going down. Big doji, 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 doji. Up, up, up. No dojis here. No doji. This is kind of a doji right there. Up, 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 up. That's all a doji is. Like right here, we see this big doji, right? With this bearish doji being formed right here, we can expect price to go down from here, because that's what dojis do. They help indicate shifts in the market structure. Okay, we see this doji right here, this bullish doji right there. What happens after that's formed? We go up, and then what happens? We have a bearish doji form right there. Okay, what happens after that bearish doji is formed? We then go down, and then another bullish doji gets formed right here. What happens after that? We then go up. Okay, that's all a doji is. It's a big wick on a candle. It's one of the simplest confluences to spot out, really, and they have great significance to the market and how it moves. So that's going to be the video on dojis. And that's also going to be, I believe, the last video of our learning confluences phase. So now that you made it to the last phase, or the last module of this phase, um, once again, I'm going to say it. I'm going to say it again. Go onto your chart and mark out every single confluence I just taught you over these last 8 videos, I believe it was. Right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. These last 10 videos I just taught you. Go into your chart, mark out dojis, mark out fair value gaps, mark out inverse fair value gaps, mark out your levels of liquidity, mark out your equal highs and equal lows, mark out, or well, you don't mark out price action, but understand what price action is as it's going between these confluences. And the longer you do this, the better it will be for you. So that's going to be it. Mark it out, study your confluences. And next, we're going to be showing you how to paper trade to actually gain confidence in what I taught you. So I hope you guys enjoyed and hope you learned a lot. I'll catch you in the next one.